Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a company that's had a bit of a tumble, but don't worry, we're here to sort through the mess and see what's really going on before its shares get taken off the market. We're looking at CUTERA Inc., a company specializing in laser and energy-based systems for aesthetic treatments. They've just received notice from Nasdaq that their stock is going to be delisted or removed from the stock market. This is because CUTERA has started a Chapter 11 bankruptcy process, which means they're trying to reorganize their business while under court protection. The decision to delist CUTERA's stock comes from concerns that the company is no longer suitable for listing because of the bankruptcy proceedings. Chapter 11 bankruptcy, just to clarify, is a part of the U.S. bankruptcy code that allows a company to reorganize its debts and operations while continuing to function. Think of it as a company hitting the pause button, trying to figure out how to pay its bills and stay afloat. It's not necessarily the end of the road, but it's a serious turning point. Trading of CUTERA's stock will be stopped by March 13, 2025. After this, the SEC, or Securities and Exchange Commission, will be notified, officially removing CUTERA from the Nasdaq stock market. That basically means you won't be able to easily buy or sell their shares on a major exchange anymore. Now, before we dig deeper, there's a safe harbor statement. This is basically the company saying, hey, we're going to talk about the future, but things might not go as planned. It's a standard disclaimer that protects companies from being sued if their predictions don't come true. They're covering their bases because the future is uncertain, especially when you're dealing with a bankruptcy. What does this mean for CUTERA? Well, the company states that they don't plan to appeal the Nasdaq decision. This implies they're accepting the delisting as part of their larger restructuring strategy under Chapter 11. The company also acknowledges that its Chapter 11 case brings several risks, particularly concerning the listing of its securities. They also remind everyone that they filed other reports with the SEC that detail the risks facing the company. If you're interested in knowing more about CUTERA, you might want to check out these reports. The 10K is the annual report that gives a complete picture of the company's performance. The 10Q is a quarterly report offering a snapshot of how things are going every 3 months. These filings can give you more detailed information about CUTERA's situation and what they're dealing with. So what's our take on CUTERA? Well, the company is facing a really rough patch, but they're trying to find a way out through Chapter 11. The delisting from Nasdaq is another blow, but they seem to be taking it in stride as part of their restructuring efforts. One of their main weaknesses right now is uncertainty. The company's Chapter 11 proceedings makes it unclear what the future holds for the company. However, if they can successfully reorganize and come out of bankruptcy, there could be potential for a comeback. It all depends on how well they manage their debts, streamline operations, and continue to innovate in the competitive aesthetics market. In conclusion, CUTERA is at a critical crossroads. The company is trying to survive Chapter 11 bankruptcy and has been delisted from the stock market. Thanks for watching. If you found this video insightful, please give it a like, drop a comment with your thoughts, and subscribe for more deep dives into the world of corporate filings.